Welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on media, and my guest is Adam Coons of Winthrop Capital Management. For almost 2 years during the pandemic, streaming TV had a monopoly on our eyeballs. From Tiger King to Bridgerton, consumers stuck at home couldn't get enough of Netflix hits, and the company even got close to a Best Picture Oscar. But the days when CEO Reed Hastings said his only competition was sleep are long gone. Consumers now have Disney Plus, Hulu, Paramount Plus, Peacock, Amazon Prime and Apple TV to choose between. We saw a sign of the tightening market last week when CNN pulled streaming service CNN Plus after just 3 weeks. After it reported its first subscriber loss in over 10 years, Netflix's stock lost a third of its value in just 1 day. This is the S&P 500 Media and Entertainment Index. It's down 26% year to date as the air goes out of the streaming bubble. The biggest company in here is YouTube owner Alphabet, followed by Meta Platforms, then Disney, Comcast and Netflix. Just inside the top 10 is the media company that hasn't been out of this week's headlines, Twitter. Elon Musk clinched a deal on Monday to buy it for $44 billion in cash. He's criticised the social network's moderation, meaning analysts expect less oversight and the reinstatement of banned individuals, including perhaps former President Donald Trump. Musk plans to take the company private, saying that's a necessary step for it to grow and become what he calls a genuine platform for free speech. The sale represents a 40% premium to the closing price the day before Musk disclosed he had bought a 9% stake, but it's far below the range where Twitter was trading just last year. Well, is the streaming boom over, and which media players will be left standing when the credits roll? Let's ask Winthrop Capital Management's Adam Coons. Adam, hi. We have to start, of course, with Twitter today. How are you expecting this to play out? What does it mean for the company?
Hi, first off, thanks for having me. For Twitter, this is a very interesting story, and Elon Musk obviously is an extremely interesting individual. So this move means that shareholders are going to get $54.20 per share, and the company is going to move private, meaning that they have more mobility to be an open source platform, and really, in the words of Elon, is move more towards a free platform and worry less about how much money they make. Actually, it seems that he wants to remove much of the ad-supported revenue from it. So it's going to be interesting how the company itself plays out, but obviously we're going to see the stock move out of indexes and move private.
What about the streaming business model? What do you think Netflix's crash last week is telling us? Is the market just too saturated?
Yeah, so this has been a thesis of ours, is that you've seen just the traditional streaming market become more and more fragmented. It seemed like every content producer around the world was coming out with a new service, and I think with the CNN Plus failure that was very quick of a failure, is just evidence of that. Is there's just too much out there, and so we moved from this traditional cable box platform, and then over the top became the new thing. And so there were one or two services that everyone had, but now it's kind of become full circle, where now it's actually more expensive and more cumbersome to get the content that you want, and people are moving back and forth. They're seeing a lot more sharing. So just the entire segment in general has kind of hit this just brick wall, where there's a lot of content out there. There's a lot of content consumption, but it's just too inefficient right now. And so I think you're seeing the evidence of that with what's happening with Netflix.
If that's true, then who other than Netflix is likely to come out badly from this?
So at the end of the day, content is king. So you've got to look at the catalogs, and for us, Paramount is one of the weaker players. They've made some strategic shifts over the last couple of years, integrating CBS and Viacom back together and basically creating Paramount. They do have some good content, but the majority of their catalog is fairly weak, and really isn't keeping up with everyone else. So we see them as one of the weakest players. The Warner Brothers Discovery The combination also is a little bit of we need to see more evidence of the path forward. They're spending a lot of money. So those are two that we think are going to be weaker players overall. And just with the overall competition landscape, it's just going to be difficult for them to continue to outperform.
So who's really well positioned here?
Yeah, so when you're looking at the pure streaming space, we do really like Disney. When you look at their catalog of offerings in the streaming space, it reaches a much wider audience. So it gives them the ability to cross sell to all their other different segments, whether it's their goods that they sell, or their different theme parks. It spreads to a wider array, and so we think that just the fact that they have, you've got Marvel, and just different studios that are producing content that people really want, we think that they're going to ultimately come out of this the winner. Now, we think that's going to take quite a while. So when we're looking short term, we still like Alphabet. Now, that is not a pure play in streaming, but when you look at media in general, Alphabet just kind of has this infrastructure that no one else compete with. So when you look at YouTube, continues to grow at a rapid pace, and it's free in essence for Google, right? They're not having to pay for this content like everyone else.
Thanks so much for that insight, Adam Coons, Portfolio Manager at Winthrop Capital Management. Well, before I go, here are some of the stories we're following in this space. In the latest Russian move against Western social networks, a Moscow court today fined Meta Platforms 4 million rubles, that's $54,030, for failing to delete posts that it described as LGBT propaganda. A 2013 Russian law that Western countries say is state-enforced homophobia bans the, quote, promotion of non-traditional sexual relations to minors. Facebook and Instagram were blocked in Russia in March after the Kremlin claimed they were carrying out extremist activities. Many Western media companies, including Netflix, have pulled out of the Russian market since the start of the war 2 months ago. Experts are warning any plans Elon Musk may have to change Twitter's moderation may fall foul of new laws in the European Union after EU countries clinched a deal at the weekend requiring social media firms to do more to police illegal content on their platforms. Antitrust chief Margareta Vestager said the Digital Services Act is designed to make sure that what is illegal offline, including hate speech, is dealt with as illegal online. Companies can face fines of 6% of their global turnover for violating the rules, while repeated breaches could see them banned from the EU. And finally, dinosaurs and Marvel superheroes will be back to try and save cinema this summer, while Tom Cruise is preparing to walk the red carpet at Cannes as studios try and tempt audiences away from streaming and back to the big screen. Cruise's Top Gun Maverick will launch the summer season a mere 36 years after the original, while a Jurassic Park sequel, a Buzz Lightyear spin-off from Disney, and the return of Chris Hemsworth as Thor from Marvel are all set to hit screens. But studios will release 40% fewer films than in the pre-pandemic summer of 2019, while box office receipts in the US are down 37% so far this year compared to 3 years ago, as cinemas struggle to win audiences back. And that's your roundup of the media sector. I'm Elena Casas, and this is Reuters.